Good morning. It is Monday, February the 6th. Going to run through the morning charts. Here we've got the US dollar index. This is the 4-hour chart, and we're zoomed out. You can see here about 6-7 months. And more or less, I just want to point out kind of where we stand with the overall trend of the market. We had the US dollar in a strong downtrend. Eventually, it started to form a base and broke to the upside. So now we've got these new higher highs and higher lows. And the US dollar has been trying to find support here for almost 3 weeks now, and you can see this could make a nice pivot low here if we see the US dollar continue to move up, or we'll see some type of bounce by the looks of it this week. If we just zoom in here, you can kind of see where we stand. It's been really struggling to hold up. We've got a little bit of a rounding bottom here, and there's a short-term resistance level which is pretty clear right here on the 79.50 area. If it can break through that, then we'll probably see a move up to the 80 level. And if we do see a break through that, a clean break, then we'll probably see stocks and commodities pull back a little bit more today. Now, with this move that we've seen up in the US dollar the past couple trading sessions, we saw gold pull back, silver's pulled back, crude oil's pulled back. The equities market actually rallied with the US dollar on some good economic numbers that came out on Friday. And so we'll see how that plays out. If this US dollar breaks above this level here and starts to move, we'll see how that actually affects the equities market. Now, we're seeing some pretty good earnings out of equities, and the economic numbers seem to be strengthening even more. So we are seeing money move into stocks, and that's really kind of helping. A strong economy is good for the dollar, it's good for stocks, so we're actually seeing them move up together. We'll see if that continues this week. Now, there are a couple things I'm going to point out that are starting to show that could be starting this major kind of move to the upside in equities that could last several more months, and I'll point that out at the end of the video. Now, taking a quick look at what's been going on this morning, we've seen the US dollar rise. So what is that down to? Commodities. Here we have crude oil, and just zooming into crude oil, you can see the rounding bottom coming up in the US dollar index is putting a rounding top in crude oil this morning. So it's been pulling back. Crude oil is pretty much, in my opinion, it's right down, getting down into a support level. There is room for it to fall a little bit more to the 95, 94 area, but overall it's doesn't really show anything too major of a setup. Overall, the pattern here is kind of rounding out. If you were to throw the moving averages on here, say if this was a daily chart, you put on the 5, the 10, and the 20-day moving average. They've all been turning down and rolling over. So right now the trend is down, and you can say crude oil has possibly put in a double top here and may continue lower, at least down to hopefully this 92.50 level, which if it does come down, we might see an opportunity to actually see a sharp bounce, and that will clear the chamber, and we could actually see a shorting opportunity for crude oil, since the trend here is starting to roll right over. But we'll have to play that by ear. We're still kind of trading in no man's land. Overall, if you were to just look at crude oil and just zoom in a little bit, you can see we're trading more or less in the middle of its range. So here we've got the highs and the lows, and you can see we're pretty much trading, we're just below the middle level. So if you're trading in the middle, it can really ping pong any way around. You really want to try and catch it when it stretches to a top or to a bottom, and then kind of play off those levels. So right now we're just watching crude oil work its way to some type of extreme, either an extreme low or extreme high, and then we'll reanalyze from there. Looking at gold and silver, this is the 4-hour chart of gold. Zoomed out about a month, and you can see here the past couple trading sessions we've seen gold start to pull back, had a little bit of a breather, and continue to pull back this morning. Now we're starting to trigger those pivot lows that I pointed out there last week. We've got these pivot lows where traders are going to have their stops put in, and as they get triggered, it causes a wave of selling. And of course you get these strong big red candles to the downside. We've yet to break this pivot low. We were off by a few cents, about $1 or so. And if it does break that pivot low, then we've got another pivot low just below it. And then we've got one more here. And then of course then we come pretty much into If you were to look at like the GLD ETF type thing, you would see more or less a gap window here to be filled. So we'll see how that plays out. There's lots of levels for stops to get triggered as the next day or so goes on, and for gold to come down and fill this gap window. At that point, I could see around the 1680 1690 level. If we see the stops get run, come down into this level, it could be the low. I don't know if it'll fill the whole gap window simply because of the volume in the trend. When it's more or less this strong coming out, a lot of times you won't get a full gap window. It'll just dip down into it, find support, and then continue higher. So that's what we're kind of looking for. If we get a pullback into this level, we'll be looking to get a long position for gold. Looking at silver, this is a 4-hour chart of silver. Of course, we're zoomed out a few months here just so you can see the previous pivot highs, which we have yet to break on silver. But overall, if we just zoom in a little bit more, we did break a previous, a smaller pivot high over here, and it looks as though silver's kind of chopping a little bit. We had some good selling there Friday, and we'll see if it ends up pulling back down. Just looking at this chart, it looks as though silver could pull back somewhere down into the 31.25 area, which will be into this congestion here, this pivot low. And of course there's this strong run up that we had here, similar with gold, and we could just see, we might see silver pivot into this area, maybe come down to around the 31 level, which is a whole number, and from there it could continue to march higher. So that's what we're looking for here as a possible entry point. Looking at the SP 500, here is the SPY ETF, a 10-minute chart zoomed out a couple weeks. Overall, we had the trend moving up in the SP 500. We were getting into an overbought condition, started to see rallies end up getting sold off on some sharp volume. Overall trend started to go sideways, and we saw a strong move up, and then it followed by 3 days of selling, and then got a little bit of a bear flag. We got a gap up, strong selling again. Looked as though the market was starting to roll over. It was losing its momentum. More or less we were having a move up and down, a bear flag kind of pattern here. Looked as though it was going to continue to break down. Instead we got a gap up. It traded up near resistance, and then we got Friday's earnings, which blew everybody out of the water, and we saw the market really extend to the upside and continue. It now has continued the trend higher now that we've broken up. So we did kind of stall out here. It was very bearish price action the past few days. Other than we did get a break to the upside and good economic numbers, which really kind of turned this neutral trend back into a bull trend, and now we're back off to the races. Now that being said, Friday was a huge up day in the market. Lots of buyers, about 6 to 1 buyers, so meaning there's 6 buyers to every 1 seller on the NYSE. Usually when you get these levels, you'll see the market pull back for a couple days, and if we were to just zoom out in time here, see the SP 500, this is more or less where we stand right now. Is you get these big gaps up, big gaps to the upside, and then you see the market pull back for a few days, fill most of the gap, and then it'll hold up, make a mini cup and handle, and continue to run. And so that's kind of where we stand right now. It feels as though we're going to see the market pull back and take a breather, and then it could continue to march higher. So let's just take a quick look at the futures chart this morning, see where we are in pre-market. So here we have Fridays. We had that big surge up in pre-market trading with the economic numbers, and then we had once regular trading hours opened, we saw everybody pile in, and more or less there was a lot of short covering, and buyers stepping in at the same time held the market up for the entire session, and it closed more or less near the highs of the day. In futures trading last night, we started to see them sell down a little bit. This morning we've seen them sell down, had a little bit of a bottom, so we're trading down this morning about 0.5% or so. So we'll see where we end up at 9:30, where the markets hold. But let's just kind of go to the market momentum chart. Here is the bar chart, market momentum, and what I want to just show here simply, here we've got the advanced decline shares for the NYSE. You can see on Friday there was a majority of buyers, and usually when you reach that level, if you just take the top number, advancing shares divided by the bottom, you'll get your ratio of how many buyers there are to sellers. And I consider anything over 3 to be kind of panic buying. So that means everybody's kind of buying. Usually you'll see the market stall out the next session. So when you get a reading above 3, usually you got to anticipate there's going to be a weakness or a pause the next session or two. Now, another couple charts I want to point out are simply the market momentum, which this here shows us if a market is short-term overbought or oversold. I consider anything over the 101 to be an overbought market. And this is on a short-term, very short-term basis for the next day's open. And this is anything below the 99 level is considered to be oversold. So when we get a bar up above the 101, usually you got to anticipate there's going to be a pullback or a gap down the next morning. And that's pretty much what we're seeing from Friday's strong close here. Looking at another chart that bar chart posts is the stocks trading above their 20-day moving average. Let me just pull that back up here. Stocks trading above their 20-day moving average. And here you can see we're trading up at this 85 level, and I consider anything above 75, you have to be very aware that a market could be putting in a top. Anything trading below the 20 level, you have to be very aware that the market should be putting in a bottom for a intermediate kind of rally that or sell-off that could last a few weeks. So where we stand right now is we're trading right up at previous levels where major highs have been put in, and it's just a matter of time before the market has a sharp kind of pullback. But until then, the trend is still up right now. It looked as though we were starting to get that last week, but it sharply reversed back up after a little bit of weakness. Another chart that bar chart does is the stocks trading above their 50-day moving average. So this is a longer term play here, and this is zoomed out. I think this is zoomed out 5 years. Yep. And anything trading above the 80 level for this chart, you've got to be very cautious that the market can be trending up. Now this is a weekly chart and you can't see the candles here, but generally when you get up to this level, you can see how there's sideways here for a while, and it doesn't look like much, but believe it or not, once you get up to these levels, yes, you're aware that the market is getting a little toppy, but the market, once it's overbought, it can extend for extended period of times and can continue to move. And a lot of these plays here where the market is topping, these last 3 to 6 weeks. So we really just got up here. We've spent 1 week up in this territory. We could see another several weeks up here of the market just kind of marching higher and going higher and higher. So that's kind of where we stand right now. You got to be aware of that. And all these things combined are all showing the market are starting to get overbought, but when you're in a strong trend, it can continue for a very long period of time. And this is what I spoke about in December, that we hopefully, I was pointing out, we're either going to get a sharp sell-off or we're going to get a runaway market, which means it just continues to grind higher without any substantial pullbacks, and it's just a runaway market, meaning it's very hard to just jump in and chase it because every day it seems to grind a little higher without a pullback, and the risk for a sharp pullback increases more each day. So it's very hard to try and get into a position. You just kind of have to jump on board, and so that's kind of what I'm almost looking at now is next pullback that we get that has a little bit of size to it. We'll be probably looking to get a leg in and just get on this runaway market and kind of go from there. So that's kind of where we stand in the grand scheme of things. Now going back to the bar chart momentum here, there's one important thing that we haven't seen in a long time that I want to point out, and that is simply this new highs, new lows. Now usually the new lows trade in our regular trading in an uptrend around 3 to 20 on the NYSE and the NASDAQ. And when you're in a really strong intermediate trend, you'll usually see new highs above the 100, 150 plus level. And on Friday, the market just surged out of nowhere, and now we've got these very strong levels, lots of new stocks hitting new highs, and they're way over the 100 mark. So we're now in a territory where we could see the market really march for a long time, because once you have stocks hitting new highs, they really don't have any resistance, and they can continue to move up and carry a lot of the market with them. So that's kind of where we stand right now, and everything is from a technical standpoint, you're starting to look at everything being really overbought here, but the underlying here is showing that there's a lot of money moving in and people are buying stocks, pushing them to new highs, and volume is light on the market, which is worrisome. But you got to remember this is the same for any time frame. When you see a light volume on Friday afternoon or light volume at lunch, usually markets drift higher. And yes, when selling kicks in, there's usually a very sharp pullback. It happens very quickly. But light volume usually means higher markets, and that's what we're getting right now. So it's kind of where we stand right now, and that's it. I'll talk to you in a bit. Bye bye.